Most retail traders rely on subjective chart patterns like head and shoulders or generic triangles. In high-velocity trading environments, these shapes often struggle to account for the raw institutional inventory moving behind the tape. Formations like these are often subjective shapes. When the tape begins to move quickly, relying on a hand-drawn triangle rarely provides the precision needed to manage a position. This diagram illustrates the transition toward objective geometric wave structures designed to map the specific contraction and expansion of institutional capital. In this framework, every pivot point functions as a data node for mathematical calculation rather than a visual guess. We analyze these movements using the DRW framework, which treats market order flow through the lens of powertrain physics. Our objective is to map the top 5 structural wave patterns that dictate institutional execution and high-velocity trend mechanics. Navigating a fast market is a structural engineering problem. It requires an understanding of how kinetic energy is stored and released through compression. This chart shows the first foundational pattern, the textbook ABC. It represents sustainable continuation of an institutional trend. Wave A is the initial impulse. It breaks through prior congestion, functioning like a vehicle shifting into first gear to move forward. Wave B is the orderly pullback. As volatility contracts and volume drops, it creates a controlled braking zone. This allows participants to exit safely. Wave C is the release. The clutch drops and the full horsepower of the trend transfers to the tape. To execute this, enter on the structural turn and place a defensive stop behind the B-wave floor. For large-scale structural changes, we look to our second pattern, the compression ABC. Contrast the previous pullback with this wave B. Instead of a shallow angle, price enters a forced horizontal bottleneck. Algorithmic market makers trap energy inside a narrow vise. Bollinger and Keltner bands pinch together, like revving an engine with the brake locked. When wave C finally triggers, the stored kinetic energy shatters higher timeframe structures, leading to a rapid price expansion. This setup is effective for identifying liquidity sweeps. It traps traders positioned on the wrong side of the market to drive a trend reversal. Flat volatility constraints indicate engineered setups designed to collect liquidity before a broad structural shift. High-velocity mechanics also involve the true C wave. A true C is a volatility release that earns structural acceptance beyond prior range boundaries. On this macro chart, you can see the price clearing heavy resistance and holding. This state is comparable to a vehicle breaking free of aerodynamic drag. The price moves into a state of acceleration where the EMAs lag significantly behind the current candle. This indicates institutional commitment. The opposing order book is largely empty, leaving a clear path for the trend. When this commitment occurs twice in a single session, we see the double true C superwave. Mechanically, this formation functions exactly like a powerful dual-stage sequential turbocharger system, where a secondary booster engages mid-run to double the output. The first phase is an uninterrupted morning expansion, where price accelerates vertically through the first half of the session. Midday, the market flattens into a microscopic flag. Note how it stays perfectly above the fast 8 EMA line to absorb late orders. At this point, many retail traders assume the market is overextended. They often attempt to short the top of the range. The physics of the market use these short positions as the liquidity needed to fuel the second stage of the move. This results in a compounding expansion that continues directly into the close, often covering hundreds of points in a single afternoon. For a double true C, never short. Instead, trail your stops strictly behind the 13 EMA line to capture the full expansion. Significant trend days are often the result of mechanical liquidations engineered by institutional accumulation. To manage risk while maintaining alignment with these large moves, we use the nested C. This protocol aligns a micro-interval wave inside a higher timeframe macro leg. The left 4-hour chart shows our directional bias, acting as a heavy flywheel providing kinetic mass. On the right 1-minute grid, we wait for a miniature ABC sequence at macro support. Synchronization occurs when the micro C wave fires. The fast-moving microgear locks into the momentum of the macro flywheel. This creates an asymmetric risk profile. Because the entry is on a micro interval, the stop loss is placed just below the micro pivot. While the risk is micro, the profit target is macro. The position is scaled to the expansion of the higher timeframe flywheel. Elite operators use this to scale size safely, risking minimal capital to capture macro moves while avoiding unnecessary drawdown. Trading a high-velocity tape requires replacing subjective visual shapes with mechanical wave anomalies. These 5 structures, textbook, compression, true C, double true C, and nested C, provide a blueprint for tracking institutional intent. By focusing on geometric alignment and the physics of order flow, a trader can identify high-probability setups within the structural gravity of the market.